For over 2 decades, the question of investing pension savings in infrastructure has lingered on. Fund managers resisted, worry of risks. So what explains the sudden change in attitude?
In simple terms, it's an allowable asset class. The only difference is that how do you do it? Are you going to do it as a private investment that you need now to do a different structuring of it, which will require professionals to design the financing component? Probably it's also taken care of. But the easiest one is to have an infrastructure bond in this market, which I think is something that has always been talked about in words, but no action. The money that has been harvested in the road toll on the express highway, anybody would wish to benefit this sector and the members. All that needs to be done is how do you structure that investment to have it in a way that the details are very transparent.
Mr. Martin Nsubuga, who doubles as the regulator, insists the core mandate must remain intact, safeguarding returns for savers.
The language from the onset was to protect. I think the conversation now should change to advance the protection. If it means that the fundamentals that were put in place are working, where they put money is defined by a policy or a regulation, so asset classes are being defined, the limits are being defined, and schemes have complied. They're professionals in this market, that's the fund managers, and they're doing their work. So we can say the foundation is pretty okay.
As managers weigh big-ticket projects, another challenge looms, expanding coverage to Uganda's vast informal sector.
The growth we are looking at more is now the numbers. How do we translate the 4 million people who are covered in this population, I think around 4.5, to include the work, they call it working population, which is around 18 million. My optimism comes from the fact that the country has vehicles that have been, that are likely to facilitate this growth. One, the fintechs have a very strong presence in this market. If you look at the numbers of the mobile money today, not even mobile money, the population covered in the telecom side, I think the numbers speak to around 45 million. So the solution is more of what is the language that can able be understood between us and the telecom and the fintechs to find a solution to this market.
Today, the pension sector stands at 33 trillion shillings, led by NSSF and a prime candidate for infrastructure investment. Yet, the balancing act remains, growing returns and attracting new savers, many of whom are exploring alternatives like cash rounds and unit trusts. Rachel Nabisubi for NTV Business.